Hi, this is Elliot Wave Sage. I want to go ahead and do a market update. And like always, none of this is financial advice. Always do what's best for you. Um, so what's going on in the market? It's shorter cycles. It's extending higher degree. It's still got a massive rug pull coming into next year. Perhaps we could finish the year out with rally. Shorter time frames. It looks like you have a 1, 2, 3, 4, and you're in wave 5 of C. And it could continue to extend and even erase divergence as this plays out. So you got to be really careful, shorter time frame, but at some point, massive news will drop to change the direction. And my guess is it's the same news that drove the A. It will be rates have to go higher, inflation makes a comeback at some point, and the Federal Reserve has to get control of rates again and show everyone who's boss, and they're probably going to start raising rates again when some data shows that they need to, and then you'll get a massive rug pull. So that's what I'm looking at here, but it could still extend, and in fact, equal distance of the A can go even higher. So if you're trying to like, I want to short it today, short it to trying to top tick, you're not you're gonna be in a lot of trouble. It's gonna be hard to predict the turn, but when the turn happens, it will be very obvious to a lot of people. But right now, it's really the mode of the market is buy the dips in three waves. And that's what we had in the Dow yesterday, and now that played out. Now that fifth wave could be done right now, right? It could be, but more than likely it'll continue to extend a little bit more until the news drops. Now the SPY, same thing. It's in a fifth wave. Could this be? And again, 1, 2, 3, 4, 5, and a 5 of 5. Could it pull back in a 2 and go 3, 4, 5 and extend? It can do that. So and the B wave can go all the way up to 512. So just be careful if you're trying to, top tick a short. I would not trade that way. I would be looking to buy dips in three waves until it's clear the higher time frame has reversed with a significant sell-off. That I think when this does turn on B, the day we turn on B, market should be down over 1,000 points easy on that turn. That's what I'm looking for to know the top is in. What happened yesterday and earlier this week is just noise, trader noise, and I would be looking to buy those pullbacks now because the market wants to drift higher. So go with the market. But the rug pull, keep in mind, this is coming. These rug pulls that I'm showing here are absolutely going to happen next. It looks like next year. And when they do, a lot of traders are going to be trapped and confused, but not. And you shouldn't be when this rug pull comes. But this fifth wave can continue to extend, and it may do that. And in fact, you have to be aware of that possibility. But don't get trapped in the rug pull. But right now, yeah, I mean, three swings, pull back, buy the dip, take your profit, and play, and have fun at the casino while you can on the long side. 1, 2, Hang Seng in a 3 of 3. And I believe we're about to take out the November 22 low. And once we do that, we could have some catastrophic selling. But just like the Russell, typically when you break that pivot, the market likes to rip higher to kill the shorts and then crash. So expect that. And that could support the market when that happens. And that could be a weaker dollar. That could help Bitcoin and crypto. So look for that. It comes down, breaks this low, and then you get a rip. And the dollar just plummets again. But that's a trap. That would be a trap for bigger declines. And like I mentioned, the Russell, that's exactly what the Russell did here. And if you watch my earlier videos as I came down, I warned about that. We break that October low, and then you get a rip higher, but it's just a trap before the rug pull. And this too could still play out in the Russell, by the way. It could still do something like this, right? Which is very likely, honestly. So that's why shorting the Russell is not a setup anymore that I've been looking at. Bitcoin is in the sell area. Actually, it exceeded it, so it's a dangerous sell, but it can reverse at any moment. My thinking is if you miss this move, it's too late to chase it here. There always is a pullback. There'll be another pullback to get this to get this reversal. But I do think Bitcoin is likely to have its own rug pull as well. Even if you don't get a new low, you'll at least get a one, and you'll get a two wave back down, probably into the 20,000s next year to get back on the trend it higher. So if you missed the move, I do think you'll get a pullback next year at some point to get on the train. But for right now, I would just be really careful FOMOing in because it's in the danger area. Divergence, it should be reversing at any moment. Or oil, again, no surprise if you've been following me with oil. Just is heading lower. It's going to these unthinkable levels. I don't know, again, why it would go down so far other than some deflationary risk-off type behavior, economy, massive slowdown. So that's what I'm looking for here. The other option is we're still in X, and you get a bigger connector here, something like this. Again, you still get something like this, and then this comes later. So not really sure, but it looks like oil's about to break $70 soon today. Gold pumped. Now gold is in a very dangerous area for FOMO traders at the moment because I'm just looking at gold. There's a couple charts we need to really pay attention to. The really long-term chart in gold. I mean, if you really look at it, you have a 1, 2, you have this 3. You could be in 4 and 5, and someone would say, well, that's too big for 4, but look how long 2 took. 2 took almost 2 decades to play out. Some who would say 4 could take 2 decades, and maybe 4 is just a massive flat here, right? And if it was, it is supported because of this unorthodox bottom. So if it were a flat, this is where it would sell off, and I have the box, and sure enough, that's exactly where we got the rejection, right there. So I do think, gold, obviously it's bullish, right? It's gonna breaking the high is good, but you need to be careful of a rug pull and know if you're trapped in something like this, you're gonna have to ride it out to get this later, this fifth wave, or it could become a 1, 2, 1, 2, and then 3 of 3 and gold moons later this decade. But either way, gold is going to be bullish as a long-term investor. But this cycle, this is what I'm thinking we need to be really careful of. And if this cycle looks like this, we could be seeing dollar strength at continuing in the rug pull. Started underneath the surface, and we may have already seen the NASDAQ reverse. So we got to be careful with gold, actually, after looking at it closer. The other alternative is 4 is done here, and then you have 1, 2, 3, 4, 5, and that's even more bearish because then 5 is finished, but 5 would go to 23,000, so we're still short of that target if it's a 5, which means we could see a little more upside in gold as that 5 plays out. So either way, gold is, you got to look at the longer term cycle to understand that a lot of the move may have already happened in this leg. The only way we can really get excited in gold is if it's the super bullish 1, 2, 1, 2, 1, 2, 1, 2 pattern, but that's a very rare pattern. I don't think a trader should always go to the most bullish pattern like that when it comes to a pattern. So I'm just going with this one for now in gold, and we'll see what happens. But if you are like trying to say, oh, I want to play for that 23,000 level, well, then I would be looking for, this looks like an impulse down. Again, that's actually dangerous, right? That means the trend has changed lower, right? So I'll be looking for a bounce and a failure. And if you're really aggressive trader, you could try to buy that dip with a stop loss. So if this C comes, maybe you can play that dip at 1940 and try to roll the dice at the casino, and you're going to get 2,300 later. But you are rolling the dice because if it's the other count that I have, then this bounce will fail, and then you'll get the wipeout wave, and you'll have to stop out. So it's probably a good trade. I'll probably take the long trade But you'll have to do what's best for you to see, and then just have a stop loss and see what happens. But I won't buy it here given the 5-wave nature of the decline. And it is ironic that it did get rejected at the expanded flat target. So that's another major warning sign that I have to consider, is if this is correct, if it's B, but I don't know. And then silver just kind of follows along. Gold, again, it's trying to break out this downtrend line, and it got a rejection there. Silver on the higher time frame could be a massive run-in flat of the ages. An A, B, C, this would be a massive run-in flat. And I do believe once we finally get a decisive break of this downtrend line, and it's trying its hardest, once we get it, then silver could moon. And if that happens, then maybe the gold forecast needs to change. But if you look, this only is 3 waves here. So silver is in a dangerous area. And then there is a dip buy opportunity in silver. Again, the box is not set, but we have an A that just looks like it finished, and then it should get a B and a C. So this C could be a great dip buy to try to play for that moon, the potential moon in silver out of the downtrend, out of the correction, into a 3 of 3 super cycle, where we could go all the way from $22, $21 all the way to $48 pretty quickly. So that's the play that I'm looking for, and it's worth a risk reward if we get this 3-wave bounce on silver here. Again, the risk is, though, you get this 3 waves, we bounce, and it fails, and then it's a wipeout, and we break this October $20 low, and then it's in a new downtrend. So that's silver. Dollar index is bouncing where we expected it to. It's continuing higher. So dollar index also is telling you maybe gold and silver is in a bigger correction. Is gold in a rug pull? If this plays out like I have it, gold will have a rug pull, so will silver. So eventually crypto too. A lot of things will be sullen off. If there is an alternative count floating around the internet where this isn't the count, but it's actually, we're still in this leg down here. This B isn't done here. We're still in a leg lower. So what that means is you have your first connector. Here's one connector, here's another connector, and we actually take another swing down. And this is really a 1, 2, 1, 2, or a 1, 2, 3, 4, 5, and we just continue lower into next year. That would be very bullish for the market. It'd be bullish for commodities, and I don't think that's possible in long as we don't break this pivot. So if we break the 10243 pivot, that would be the first sign that potentially gold, silver, commodities are about to have another great cycle higher, maybe even the stock market too. And this rug pull will be coming later, but eventually B will be set. And when it does, you do get this next leg higher, which should be the crash wave. So let's get rid of some of this, because this isn't relevant anymore. Let's kind of clean up this chart a little bit. So that's what I'm looking at, but it could be something different again. Like I said, we could have something, and this would be something like that. And if we're in that would mean the market could continue higher, but it doesn't have to, because this could be a bullish inflationary spike, and the market could actually drop. But the correlation we saw last year that in the bear market, we didn't see that, so I don't think that's the case, but we'll have to keep an eye on it. So, but right now the market is in a lot of danger for that rug pull to start, and we may have already seen it in the NASDAQ in this area here. So this pivot is very important to hold, I think. And then the 10-year is continuing lower. Again, ultimately we have this target of 3856. Again, a lot of traders are trying to play in the bond market, but it's just not a good area to trade in at the moment. But unfortunately, the bond market will reverse soon, and I think it will. It still probably has more downside in rates. This is why the market probably is still going to go up a little bit more. But once this 2 is set, we should get a massive move higher in interest rates. So that's what I'm saying is the Fed going to try to get control of rates again? Is something going to happen? Uh, but I do think this is a two wave, not a four wave, not a five wave. I believe it's a 1-2, 1-2. Uh, what would change my mind is if we broke 3-2. But it's still a two wave. Then it'd just be a bigger two wave. But the bad thing people are going to be facing is this is an impulse up, and this is a corrective cycle, whatever this is, even if it's labeled wrong. That means there's another leg coming higher in rates at some point this decade. So at some point in this decade, the 10-year is going to trade at 7 to 8%. It's going to happen. So when that happens, the market's going to get wiped out, guys. There's no way the market's going to survive that swing. When that swing happens in rates, that's the swing when C comes into play. But that will represent a potential generational opportunity in bonds and potentially even equities when that happens. But I think right now though, traders are not thinking that. They're just thinking of the short term. Mortgage rates, again, we've been trying to mortgage rates for a while. So we're in this two wave like we have here. Now we have a 1-2, 1-2, but I probably looking at this looks like a full cycle. So what I'm going to do is switch it around a little bit. The mortgage rate cycle, and put the 1 there and put the 2 there, and that's kind of where we are right now with the mortgage rate cycle. Could we still be in this degree too? That's possible. Because this could be 3 up and a flat. If that's the case, home prices are going to go up quite a bit this summer, because then long term, then you got mortgage rates dropping to 5, 6, 8 this summer, 5, and everyone's going to go crazy, buy houses again. So that's what's going to happen. And the rate, and as rates go down, housing prices go up. That's typically what we see. So we can't rule that out for mortgage rates, but right now I'm just going with discount. And eventually mortgage rates will be in the double digits, and that should end the cycle, hopefully. But you got to do what's best for you on that. VIX, still looking for that one more low in 5, and we should get that. That should help the market go higher. And that's all I've got on the overall market, guys. So yeah, shorter time frames, the market should grind higher, buy dips, scalp, take your, play in the casino and take the easy money that it's giving you. But then at some point there'll be a massive news drop. Could it be Powell in his conference? Could it be something else? We don't know. But when that news drops, I'm looking for a 1,000-point plus down day in the Dow, and that should do it. And that's the type of day I'm looking for, a Volmageddon type event. Where it's VIX is up 40, 50% or even more in one day, and that's what I'm looking for. And then the B is in. Until then, all these dips are just going to be buying opportunities as it grinds higher, because really it can grind higher all the way up to 39,000 Dow, SPY 510. So if you think it's going to just end, you got to be careful that this can extend for quite a while. So you got to be careful. But the swings are in. The swings are in. So the market maker, Aladdin, whoever you want to call it, when they can end this at any moment, and then that's it. That's it. And then it'll be lights out. Similar. Typically a flat will be similar to the 2009 situation, where it'll be a massive crisis all of a sudden that no one saw coming, and mass panic, screaming on TV, crying, yelling, Kramer going crazy. It'll be a sight to behold when we're in this sea leg. It's going to be a crazy event, but a massive opportunity, because especially if the Dow can break the all-time high. If the Dow can, the ideal case is the Dow breaks this all-time high. We get B, and then we get this. This will set the historical trend is in place. that will mean that this is absolutely a dip buy opportunity with confidence. If we don't get that, then the super bears could say, "Oh, that's just a 1-2, and we're going down into a bear market into oblivion." So, but once we break that all-time high, then I think the pattern changes. Yeah, we get this rug pull, but then the historical trend is intact for many years to come. So this could become such a massive opportunity. But it would be great to get that confirmation, because if we don't get that and B gets set before that, and we get into this decline, you do have to keep the super bearish case in the back of your mind, and you don't want to get trapped in that. So you get just something we'll have to think about. But I would be nice to break that all-time high here. It would be nice to confirm that. So we'll see if that market can do that in the next couple weeks. All right, guys, that's all I've got. Bye.